Hi, in this lesson you're going to learn what pattern trading is and the types of patterns. That's continuation and reversal patterns. Now there surrounds a lot of controversy with pattern trading. What happens is that people think traders actually imagine or see a mirage. But I'm not here to convince you for either stance. Trade Academy is here to explain. You can do the judging. Let's see a real pattern trade in action. Let's look at Bharti Airtel. Now, as you know, this is a phone service provider. It has millions of mobile connections throughout the nation. Now, lately, a lot of people have been complaining about call drops. That is, after you're talking to someone, suddenly the call disconnects. Now, you see, Bharti Airtel charges on a per minute basis. So, if your call drops after 10 seconds, you're still charged for the entire minute. Now, this means users pay more than what they are using. The Telecom Regulatory Authority, that's the TRAI, decided to do something about this. Now, this decision took some time. The market was divided. Half of them bought Airtel on every fall, expecting a positive announcement from the TRAI. And the other half sold Airtel on every rise, expecting a negative announcement. Now, what do you think happens when there is a balance? The investors in this case were balanced, buying on every dip and selling on every rise. What resulted was a symmetrical triangle. That is a continuation pattern. And soon enough, the TRAI announced a per second billing. Now, a per second billing structure is bad for the company since it means smaller profits. This is why the market broke down. Instead of understanding this entire situation and story, a pattern trader would simply see the symmetrical triangle and be able to short it at the breakdown, also making a clean profit. This is what pattern trading is about. Crowd psychology imprinted on the charts. Us humans follow biorhythms and instinctual tendencies etched by our evolutionary journey through time. In other words, we're pretty similar when acting in groups. Patterns are one way of giving us an edge in the market. Out of the hundreds of millions of trades on the stock market, there are patterns that occur quite frequently, and we can divide them into two types: continuation and reversal patterns. Now, patterns are always seen in context of the existing trend. Well, that's why it's called continuation and reversal. So if you have a continuation pattern that's found in an uptrend, we expect the pattern to break out and the uptrend to continue. A reversal pattern means we expect the trend to reverse. Now, this course is going to focus only on continuation patterns, the symmetrical triangle and the flag pattern. In the next lesson, we're going to understand what the symmetrical triangle is and how you can trade it. That means we'll give you an entry point, a stop loss, and a profit target. I'll see you then.